Hello, this is Right Side Trader. Today is September 8th, 2025, and this is going to be a quick look at the market and things that I trade. I didn't trade this product today. I'm just doing a special video because of the new subscribers. Thank you, new subscribers. I don't know if you're interested in day trading or just looking at my market review type stuff where I'm covering the market review. But again, anything and everything I put out here is for educational purposes only, no trade recommendation, because as we all know, trading is risky. You can lose money at trading. So please check with your financial advisor. Please check with your significant other and make sure trading is something that is suitable for you. All right. Let me just jump over here to this chart because this thing was doing something crazy. This is like my third try at trying to capture this, and I haven't quite yet. But I will get it this time, and I will get it right. I made some notes to myself. The thing is, there's two different products it's a lot of different products that I like trading, but the two that I trade the most are NASDAQ, QQQ, and IWM. And I'm usually looking at these products, together on multiple. I'm usually looking at all. Well, I look at the three indexes, the NASDAQ, the Russell here, and the SPY most of the time. But I end up usually trading the NASDAQ. I trade the NASDAQ 90% of the time. And then I may throw a trade over at the Russell. And the Russell today gave a nice setup. But I was already in my Q trade and stuff. And I said, I'm not going to throw money over here at this too and be looking at both of them at the same time. Because, again, they're usually just they're scalp type. I call them scalp type trades. I'm just trying to catch a move in the market, and I'm done. And that's it. And that was the thing is I had already had a couple of Q trades. I had a couple of Q trades on already. So again, I didn't want to jump over here and then that Russell at the time. But I'm gonna talk about the Russell trade that I didn't take, that I didn't. It's not that I should have took it, but again, I had another virtual trade on the Russell that we'll take a peek at the end, But let's take a quick look at this and see what I'm seeing and again, one of the things is notice. The only indicators that I have on here is my custom indicators that I like, and all. The dotted line just shows me where the market open at. These dotted green lines are my custom pivot lines, which I have an H1 and there's an H2 on there. It's an L1 and it's an L2 further down, and these right here are my SVE pivots right here, and all. One of the things is when it comes to me, you don't need too much on your charts, But I let you know I do have other indicators on other charts. This chart here, I like keeping it clear so I can see what's happening in the market with not a lot of other stuff going on, a lot of other distractions. That's the thing that in my opinion, having too much on it, it's just distractions and all. You got to learn to see the patterns in the market. You got to learn whatever indicators you're using. You want to keep it simple to those simple indicators that you're actually using, and you've proven to yourself that they work for you, and proven it to yourself that they actually work for you. You should be making money and all. And if you're not making money with whatever you're using, something is wrong. Something is not right. This game is, when it comes to if you were successful or not, it's very easy. You're making money or you're not making money, period. It don't need to be any more than that. I talk a lot about candles and candle patterns, and I got the simple candle thing out there that you should look for. And this is right here, one of them that happened this morning, right here. That's what you call a morning star. It's a 4-candle morning star. But the other thing that happened here with that little simple bottoming pattern that we see is these two candles right here, this red candle and this green candle. And the thing is, when this is actually happening, the first thing that I saw was that. I didn't know that this was going to happen. This candle right here was going to happen. But once it did happen, I'm one of those. If I had traded this, because I was looking at it and I saw the time also that was coming up, 10:30. I'm in there right here because I like getting in these trades before that time right there, because again, the reversal has already started, and look like it's gonna reverse at this point, So, and with options, you usually get some crazy pricing at that time, that 10:30 time. So I want to try to get into that option trade before then, and I'm looking at my option pricing to try to get the lowest possible price at that time as I'm looking at those option prices fluctuate and all. So that's pretty much the trade. Now, that's your entry and all. your stop. Your stop, if it breaks these lows right here, it's time to get out of that trade. So you have an entry, you have a stop, and then target. Your target, my first target is here. Just get me back to pivot. And even though one of my rules is if you open above pivot, I expect you to get back above pivot by the end of the day. But that may not happen, So again, that's just the target. So because it might come to pivot and reverse down. Then my second target is this other line right here, where it's at right now, I can hold on until then, And again, I'm adjusting my option prices based on what I see in the market, what that option should be priced at once it gets there, So that's that. So that's your entry. That's T1, and this is T2 up here. And if you want to have a T3, which some indicators and stuff that out there actually have, this would be your T3 back to open. This would be your T3. So that's what I see. And it's all based on, from the beginning, I'll go back there, it's all based on candle patterns. First of all I saw was this. This pretty much was my confirmation, and this really here is your confirmation candle right there. So at the latest, if you were actually trying to take this trade, and again, this trade played out today doesn't mean it's going to play out tomorrow or any other time that you see this, but this is where you got to get where you position size yourself, where if it doesn't work, how much money are you going to lose if it comes down here to your stop and start wanting to go back down? So you have to get to that point. That's what you have to look at. So now let's go ahead and take a quick look at the options and what it would have cost you to place this trade. And that's where I get back to. I'm gonna go here. I need to change my cursor back up. I want to go here and say we got in on this candle here, and that candle there, and we would have been around. And we're gonna use that's at 10. Say I like getting in before 10:30. I'm not going to get in at 10:30. So I would have got in. One of my virtual trade just closed, and that was a virtual trade because that's all that's out there now. We'll be doing this live trade. My virtual trade just closed. I would have been in this trade, around somewhere below 237. And so 237 would have been the strike of the option that I would have been getting in. And I know the way I trade, I would have been in this trade somewhere between 1020 and 1025 on this trade right here before 1030. So one of the other things that I like for you to see, and one of the other things that I don't mind showing here and sharing here, is the option change. On this platform, one of the nice things, I'm going to go ahead and maximize this because this is what we're talking about. I'm going to maximize this. I don't want to do that. I want to go here, and I want to maximize. I like playing 10 to 11. It's a day trade. I don't like, if you've been hearing me, I don't really like playing these buying it and trying to scalp these 0-day options. I'll do it with some products, but with this particular product, I'm not going to do it. I might do it every now and then when that was like an oh my god type setup really in my world, when I see that. So that was a okay one to do the 0-day option and having the target far enough away So again, I would say the price of the stock itself would have been around. I'm going to be looking back over here at the price, and I'm looking here at where that candle was at here. So what I'm doing here right now is going here and looking at this candle here, this confirmation candle. So on this confirmation candle, say somewhere around here, I would have been in that trade around 237, based on not based on the way most people would do it. I would have been in early because that's just the way I am, So below 230, so 237 would have been the option strike that I would have been playing. So 237 is this option right here, is this one here. What I'm going to do, I'm going to show you something else. I'm going to do a right click. I'm going to say more information, and I'm going to throw it to a toss chart. I'm going to throw it over here to another chart so we can go and look at the option itself and the option pricing and stuff. So let's change this up a little bit. I want to go load style. Chart default right here. That should be good enough. Change it from weekly to let's go down to a 2-minute chart. Again, we're trying to look at something here and all. I said, you know, worst case, you'd have been in this trade at this time right here at 10:30. Best case, you'd have been in this trade, you know, around 10:25. So let's go back here around the 10:25 time and the 10:30 time. 10:25 time looked like you'd have been buying this option around $3.35 or $3.30 some cents. So let me write that down. Let's just use the 330 round number and all. And you would have been out of this trade at, you know, your first target would have been here at 40 and all. And 40 is probably these guys right here. So you'd have been out of this trade at this time right here at this price. And we're going to use 370 getting out of that trade. So you made 370. I'm saying you made, right, in 340. So you would have made 40 cents on that trade. And all, just looking at that. Does that make sense? So again, you'd have been getting into this trade at a price of, let's say, I'm saying here, I'm gonna give you the best price. Let's round it though. Let's say 30. Let's say you got in that trade around at $37. At $37, $237. Say $237. I know this is getting kind of crazy, you know, for some of you. You know, but this is why I say you need to know third grade math. It's easy. And you'd have been out of that trade at, let's round that, you'd have been shooting for here. So, but the round number that we'll use is 37.50. So 37.50. So 237.50. So that's the difference between the two numbers that I've just mentioned was 37 and 37.50. That's 250. So that means that you would have made 50 cents on the market moved 50 cents in that little thing for your first target was 50 cents. Your second target is a whole dollar. So on your first target using a 0.5 delta, you would have been looking to make around 25 cents. And then your second target, you'd have been looking to make 50 cents or more. And all. Let me just kind of write this down. This is kind of, I know, I'm going to just write down the numbers that I'm saying. First target, I'm going to put it down here, T1, you would only made 25 cents because it made a 50-cent move. And I put a kind of trying to write with this. I'm going to put a 50 there. Then the second target, which would have been made a dollar move, is T2. You'd have made 50 cents on that because you're playing a 0.5 delta. You'd have made 50 cents on that. That's at a 0.5 delta and all. And seeing it's having problems there. And also it's going to have problems up in there because of this red candle that we're looking at. So that it just, like I said, just because it happened today, it means it's going to happen tomorrow. So now, the money and all. So let's say one contract at the time that we got into the trade, if you remember, was around $3.30. Let me I can do that. $3.30. And also your entry was $3.30. Because again, I want you, some people, if you're new, kind of understand the whole pricing, the whole money thing when it comes to options. $3.30 equate for one contract is $330 because everything is times 100. So your target, and we're going to go T1, and we're going to go a T2 target. Our T1 target, we said, was $3.70. So that's $3.70. That equates to $370. and all. Getting kind of sloppy. Let me see if I can clear that up a little bit. $3, and that's an ugly 3 still. $370. You get, so now the difference between entry and that is just $40 with one contract equals, $40. That's all you're gonna make on that trade, But $40 investing 300 and some dollars, you're making over 10% on the trade. So for me, that's a good trade. Even after commissions, you should be able to clear, over $37. So that's over 10% on the trade. So now your second target that we were just looking at is not until here. And as you can see, it struggled a little bit. And like as soon as you set your number, as soon as you got out of there, you'd have been done. And at the time that this is at 11 o'clock. So we want to come back over here and look at this at 11. Our option price, we're going to use $4. I'm looking at this right here, and I can see, nope, we can't use $4. We're going to use $3.95 and all. $3.95. Let's just use $3.90 because again, let's just say you didn't get out there. You said me a lot of times I say I'm gonna get out just below that and all. So $3.90. So $3.90. So target 2, your option price would have been at $3.90. It's 20 cents more and all than what you had before. That equates to $390 and all. And now you would have profited. The difference between $330 and $390 is $60 on the trade. And that's it. So again, options, you can make a lot of money. And if you're looking at the percentage there, again, that's closer to around 30%? About 30%. Not quite 30%, about 25%, blah, 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 blah. It's close to 25%. Is it close to 25%? Oh, no, it's over 20%. You made some money. That's bottom line. You made some money. And now that's one contract. So if you did 10 contracts, you got to multiply everything times 10. So it would cost you $3,300. That's $3,300 to get into the trade entry. And now getting out of at your T1, it'd have been you'd have made $400, right? It'd have been $3,700. $3,700 getting out of that trade. The difference between those two numbers is $400. So you would have made $400 on that trade. That's a good day's work, and all. And if you was confident, or felt really good that it was going to actually reach, your T2 up here, and all, that's $600 on the trade. So making $500 is not difficult on the right day, and it doesn't happen every day, number one. But we can see, I'm looking back over here at the option prices, I can see that we are at that 390. So that's where we're at, and all. Again, still. So that's not real unrealistic. And we're looking at the chart here. So again, that's what I look at and all when I'm looking to do these trades and stuff. Go ahead and erase all that mess. It's all about seeing the setup, the entry down here, and then taking I'm aggressive. I'd rather take that trade. I rather prefer to take those trades as soon as I kind of like see them setting up and seeing me a confirmation candle based on what I saw there. Because again, that keeps my stop, real close and stuff. And then if it plays out, I'm usually out of all of it right here. So that's just me. And so that only would put me at that $400 or so, probably closer to the $400 for the day is where I would normally be at. And that's about right for me. So it's more than, again, with the way since you're playing at the money options, they move a little bit faster because of impact of gamma and delta and all that kind of stuff and all, which is not really that important to me. It's important because, again, but the thing is, you'll see that it's different on different products and all, and that's what happens. So, but you're looking at, at first we was just looking at making that 25 cents, which would only been $250, and I would have been quite okay even with that $250 if I had made that. I saw that on the trade because, again, I know I'm usually setting my option prices. I see that it's going to be 25 cents is what I should be making at a 0.5 delta. I'm going to be setting it for 30 cents on that option price, meaning that $3.30 that I would have paid for it and all, my exit price would have been set at $3.60 and all to get me out of that trade. And then sometimes I will adjust it because I will adjust it and all because I see, oh, that market is running. I'm getting pretty good, strong, bullish looking candles pushing up. I might think I can get a dime more or something and all, and I'll do that. But most of the times, I'm going to just let it sit at that $3.60 to get me out of that trade. And then once I see it go by there, I say, okay, there's tomorrow. And I still got money to trade, and I'll trade tomorrow. And that's pretty much it. And that's pretty much, I hope this is kind of showing you the money and showing you what things that you can actually see and things that you can actually study, see how often these little patterns happen, get where you have, clear setups for your entry, clear things to give you confirmation, clear targets and all where you want to go, wherever it may be and all. And it's not at a clear point where you want to get out of this trade and all. That's what trading is all about, being willing to take risk when you see your setup, willing to take your trade off when it's reached your target and all. Because, again, look here. The other thing that we're seeing right here, it's done, and that was pretty much it. So this is what I do day in and day out when I'm in front of the computer and I want to trade with my little short-term scalps. It's just that straightforward for me. And again, as you can see, it's just simple candle pattern stuff that I'm looking at. Plus, I do have some other indicators that I also gives me that confirmation that I'm okay with taking those trades when I do see them. And that's pretty much it. That's all I really want to share. I hope this is being helpful. Got a little bit longer than I really want it to be. Maybe I can cut it up into some shorts and something and leave it at that. But that's it. Hope you guys find this helpful. Thank you, new subscribers. I'm probably going to put out another little special video tomorrow on the important dates of dividend trading and all, and start talking about that because there was some guys before. It's been a few guys, a handful of guys that I know had asked me about buying dividend stocks, and I know even my son, he's looking into dividend stocks, and I'm going to start talking a little bit more about that because I know he catches this stuff every now and then too. So I need the first video is going to be about the important dates of dividend stocks. Then my thing is when it comes to dividend stocks, should you hold them or should you trade them and all. And then based on which one, then based looking at the charts, which ones should you hold and then which ones should you trade. And it's just still it's all based on your trading plans, your portfolio. What do you plan on doing, and what's your overall strategy is for yourself, what you would do. But I'll give you a view of how I look at things and what I may do. Although there's not very many dividend stocks that I don't hold. Do I hold a dividend stock? I might hold something that has going to collect a dividend, but again, I'm not usually buying them for the dividend themselves. I just buy them based on what I'm seeing set up on the chart, and I'm usually trading them. I buy them and then I start selling cover calls on them. I sell a put to get into them, then sell cover calls to get out of them. I do that whole strategy thing, which is really pretty nice. Other than that, I got kind of off subject there, but it's kind of like what's coming up next, some of the other things that I'm thinking about doing and placing out here. But that's it. This is Right Side Trader. Hope you guys like this, if you want to see more of this type of stuff, I will do more. And the thing is, I would be showing you, just based on the stuff that I already have out there, the different candle pattern setups. When you see them, how do I trade them? Bottom line. And most of the trades that I do are going to be bullish trades. I'll tell you that too. That's just me. I am a bullish trader. I do not take this trade that we see setting up right here, a trade maybe that may come back down to the downside. I would just say pass. That's it. And that's it. That's all I really want to share. This is Right Side Trader. Hope, like I say, I hope this is being helpful, and I'll talk to you next time. Have a good one. Bye.